When it comes to measure an economic growth of a nation, there are multiple ways to measure that. But if you look at the mainstream media, you will always hear GDP, which means gross domestic product. That is an indicator which actually measures the overall spending across the nation. And the reason why the government used that parameter or indicator to reflect the GDP numbers is because it's so easy to manipulate. How? Because if the government is running huge deficits spending, that spending will definitely going to increase the overall spending in the economy. Okay, and if you import 2 million people in this country in the span of 2 years, of course those immigrants will bring their capital with them. They will invest into the economy. They will spend money in terms of buying new clothing, buying cars, furniture, home renovations, renting apartment. To some extent, they're also buying properties as well. So when they do that, they have to pay realtor, they have to pay for lawyer fees, land transfers tax, mortgage brokers, and all of that stuff. So pretty much, collectively, this drives the spending power. So in a country like Canada, where we're importing millions of people in the span of 2 years, which will of course drive the spending power through the roof, and of course the GDP number will look much better, right? So when you see mainstream media and you see the GDP numbers are looking good for Canada, don't be fooled, because that's not because economy is growing. That is because the stimulus that the government is pushing using deficit spending, as well as bringing immigrants, which is driving the spending power. So the true way to measure economic growth is by using two indicators. Number one, GDI, which is the gross domestic income, that measures the income level rather than spending. Okay, you know the difference, right? So that's one way to do that. The other way to do that is GDP per capita. So where you measure GDP and you divide that number by the entire population. So that will give you the per person level GDP number, which means at a per person level, how much are we spending? How much is my purchasing power? How much is my spending power at a per person level in Canada? So when you look at GDP per capita, it has been consistently negative for the 6 quarters. Okay, and if you look at the trend, that is going down south. And I have been talking about this on this channel on multiple times, and today Bank of Canada also expressed their concern about the lack of productivity growth in Canada. So this morning, Carolyn Rogers, who is the deputy governor of Bank of Canada, she was talking to at an event in Halifax this morning, and she made some very, very serious statements, and some of them are not really easy to understand for an average Canadian. So I want to make sure that you guys get it and you understand what she's trying to say, because some of those statements are very, very concerning, and we should all be prepared what's coming ahead for us. So let me share with you what I'm talking about. So the headline of that document is Bank of Canada says the economy faces a productivity emergency. Okay, so she's saying that Canada must tackle weak productivity to inoculate the economy against factors that will drive future inflation. Okay, such as pullback from globalization and other parameters like, wars and the incident like what happened in Baltimore, where the bridge collapsed, and that was one of the major trade route for trucks to offload the containers on the ship and then deliver goods and services in the US as well as in Canada. So that will impact the trade route between US and Canada, right? And that will, because the trucks have to take another route, which will increase time and money, which will drive the inflation. Okay, so in an economy, you always have deflation and inflation forces competing with each other. Okay, at some point, one takes over the other. Okay, it always happens. So you always have cross currents of different inflationary and deflationary pressures. So going back to this article, she's saying an economy with low productivity can grow only so quickly before inflation sets in. But an economy with strong productivity can have faster growth, more jobs, and higher wages with less risk of inflation. So let me explain what she's talking about. So she's hiding something. And what she's hiding is she did not mention the currency debasement. So inflation has, of course, multiple reasons, but one of the major reason of inflation is the currency debasement. So when you debase currency, when the government run fiscal deficit, when they borrow more than what they earn, then you are printing new money in the system. You're injecting brand new cash in the system, which will debase the currency against the limited supply of goods and services. When that happens, it drives the inflation. Okay, that's one major cause of inflation in the economy. There could be other reasons as well. Okay, there could be lack of productivity, deglobalization, wars, and all of that stuff is also inflationary pressures. So what she's pointing here is telling you half of the story. She's telling you that in the lack of the productivity in the economy, you basically have inflation and deflation at the same time. But when you have higher productivity, that will actually create deflationary forces in the economy. Okay, with productivity, you can actually create deflationary pressures, which will mitigate the inflationary pressures coming in from the debasement of the currency. Okay, but if you don't have productivity, that means there is a lack of deflationary pressure, which will allow inflationary pressures to overcome. Okay, because you will always have debasement of currency coming in from the fiscal spending and from the new currency printing, which will always put inflationary pressures, right? So in the economy where you don't have the productivity growth, this will allow the inflationary pressures to overcome. Okay, that's what she's telling you, but she's telling you half the truth. She did not mention about the currency debasement part. The other thing that she mentioned here, which is very valid and very concerning as well, is Canada's productivity has fallen from a not great record of producing 88% of the value generated by the United States economy per hour in 1984 to just 71% in 2022. Okay, let that sink in. We used to be producing 88% of the value generated by the US per hour basis. Now we are generating only 71%. Okay, and that's only in 2022. Things might have been further deteriorated in 2024. So while weak investment has been a problem in Canada for the past 50 years, the gap between the level of capital spending per worker by Canadian firms and the level spent by their US counterparts has become worse over the past decade. So when you have companies spending more money onto their employees to train them, to reskill them, to let them learn new skills, being more productive, that will always result into more productivity. In the US, the companies are spending more money compared to Canada. So that lack of capital spending on employees is one of the major reasons in Canada. So I had a podcast recorded on over the weekend where we talked about all of these things. This is the reason why we don't have enough opportunities in Canada. This is the reason why the people with skill and talent tend to leave Canada for that very reason. Further go on, while the US spending continues to increase, Canadian investment levels are lower than they were a decade ago. She's adding that Canada has also fallen behind most of its G7 peers, with only Italy seeing a large decline in productivity relative to the United States. So in the G7 countries, Canada literally at the bottom, just above Italy. Okay, the rest of the G7 countries are much better compared to Canada when it comes to measuring economic growth as a percentage of the US. So that's what she's highlighting, that right now we are in an emergency and we need to tackle that, unless otherwise we're going down south, right? If we don't fix it, she's telling us that inflation is going to come back because we don't have the catalyst that will produce deflationary pressure, which is productivity, and when we don't have that, the inflation will come over. Okay, because the debasement of the currency is still going on, right? That's not stopping. The other thing that she mentioned is increasing competition is among the solutions that Rogers proposed. She also urged policymakers to focus on sectors and companies that add greater value to the economy and to set the stage for increased investment including in technologies that will improve productivity and efficiency. So what she's saying between the lines that we have a problem of monopoly and oligarchy. Look at this, 5, 6 banks here. Other than that, nobody can survive from a banking system perspective, right? If a bank like HSBC come over, it will be acquired within no time. Same goes with insurance companies. Same goes with telecom companies. We only have 3 telco operators. They will not let anybody else to survive and thrive. So when you have this huge monopoly and oligarchy, who's going to pay extra money? It's the consumer like you and I. We pay the highest amount of fee in the internet and telecommunication services in the world. Like, this is ridiculous. And the government supports that oligarchy and monopoly, but they don't let the other players to come into the market. Why? Because they want to protect the Canadian company and let consumers empty their pocket to pay some ridiculous level of services. Anyway, I'm going off the tangent. She mentioned one thing here, which I want to mention, that new Canadians are working in jobs that don't take advantage of the skills they already have. Like, all those new immigrants coming in, they are doing less productive job, low wage jobs, because there are not enough jobs available in the market for the skill that we are importing in from. So I know a lot of good qualified people are driving Uber just because they cannot find a job as per their skills in Canada. Like, we talked about that in the podcast. If you did not watch that podcast, I highly recommend that you watch that. There should be a link up there. It's a 40 minutes for podcast where we touch upon all of these topics, comparing US and Canada when it comes to job opportunities. There you go, guys, right? She is preaching to the choir. I have been talking about this point on my channel on a repetitive basis and telling you that the currency debasement is continuing to happen because the government is running fiscal deficit. Okay, that's not going to stop. And if the banks are continuing to inflate the mortgage balance sheet, this will also drive new dollars in the economy, which will fuel the housing market. And if we don't have productivity to offset that, the inflation will likely to continue to go up. Okay, that is the main takeaway of this video. Okay, she's highlighting that we have a problem with lack of productivity. If we cannot fix it, we're going to have more inflation because the currency debasement will continue to happen, and we don't have the deflationary pressure, which will come only from the productivity. Anyway, these are just my thoughts. You let me know what you think about that. Put your comments down below. If you like this video, give me a thumbs up and subscribe, and I'll see you in my next video. Bye.